Do you know that there are major differences in thinking process between fundamental analysis and technical analysis? That's the reason why both analyses have different perspective about the market. Hi, I'm Sibai So. In this video, I'm going to share with you what makes the thinking process between fundamental analysis and technical analysis different. An investor using fundamental analysis will have a different kind of thinking process as compared to another person who is using technical analysis. Click on the subscribe button and turn on the notification bell so you won't miss any informative videos we are producing for you to help you improve your game as a trader. So let's get started. Now, as you know that in Malaysia's futures market, we have two widely traded futures product, which is the FKLI as well as the FCPO. Now, let's look at their fundamentals first. Generally, when we want to analyze the FKLI fundamentals, we want to look at several factors that affects it. For example, we want to look at the local economy, company earnings, industry theme, capital flow, a foreign country policy. Maybe you want to look at the Dow Jones Industrial Average or even the S&P index, a local country policy, whether is it ringgit strengthening or weakening, major events that is happening around the market, as well as some other factors. So all of these factors may influence how does the FKLI move. Whereas if you were to trade the futures crude palm oil FCPO, you would want to look several factors that affect the price movement of the FCPO as well. For example, you may look at how weather would affect the FCPO production, whether ringgit is strengthening or weakening, the local economy, how does another competitive vegetable oils, which is the soybean oil, affect FCPO, local country policy, demand and supply of the FCPO that directly affects the price movement, foreign country policy, crude oil, as well as any other factors that may affect the FCPO price movement. So we want to observe all of these factors, how it impacts the price movement of the FCPO, whether is it going an uptrend or whether is it going a downtrend. Whereas if you're using technical analysis to analyze FKLI as well as the FCPO market, majority of the technical analysis method is about studying the past price as well as the volume to determine the buy and sell signals. Now let's look at our daily life activities as an example so you can understand the concept easily. How different is fundamental analysis as compared to technical analysis? So for example, there will be the time when you feel physically hungry. So what happens next is that you may be thinking of heading towards your refrigerator, and then you may open your refrigerator, and that's where you want to take up some of the materials of food so that you are able to cook, and then you may consume it and then eat it. So what can we learn from this simple example? So as you feel hungry, so that's where you would find something to eat, right? So hunger is what we call as a cause. So the effect is a behavior that you perform. You are eating because you're feeling hungry. So this is a very basic and simple concept about the cause and effect relationship. Now let's go back to our earlier example of our daily life activities. The whole process of what we do when we feel hungry. So here we can see that hunger is the cause or the reason behind that drives our behavior. So what we're going to do next is that you may get up from your chair or get up from your bed to walk towards your refrigerator and open your refrigerator and look at what are the materials that you want to prepare. So here we can see that at the initial step, you already have a simple cause and effect relationship. And what happened next is that you are preparing material because you have opened the fridge, right? And what happened next is that you need to prepare your material first before you are able to cook. and then before you are able to eat, you need to cook first, and that's where you finally get your food prepared and ready to consume all those food to get rid of your hunger. So here we can see that there are multiple cause and effect relationship. So this is a simple process of how fundamental analysis would be thinking. It is called the forward reasoning. Forward reasoning means that you're gathering facts and data with all of these so many reasons, then a conclusion must follow after that. Here your objective is actually to find what is the conclusion. So now that you have already gotten all of the cause, you would want to know what is going to happen next, what is the effect next, so that you are able to make a conclusion about whether the market is actually going up or going down. Now let's apply this to our trading situation. Let's say you found out that the changes in weather would affect the FCPO price, and you want to find out that what is the impact of it. So this is where you want to determine whether the market is going to go up, going down, or going flat. And of course, weather is not only the reason that affect the FCPO price, right? There are several other reasons as well. You may want to look at how does Ringgit Malaysia is going to affect the FCPO price, whether it is strengthening or whether Ringgit is actually weakening. And maybe the local country policy is going to affect the FCPO price, for example. So other than feeling hungry in order for us to open the refrigerator, it can be our daily habit where at a specific hour where we would just want to prepare our food. Another reason for us to open refrigerator, it can be because if you're doing business when you receive a customer order, so that's where you want to open your refrigerator in order to prepare some food. Here, by studying and understanding the possible causes, we will be able to anticipate the possible behaviors that we are going to perform next. The same principle as well as thinking process when we use fundamental analysis to analyze the market. We would want to understand and study the potential causes first. What are the reasons that affect the price is going to happen? So it is important for us to study as well as analyzing all of the causes first, and all of these causes are actually the factors that is going to impact the price later on. So the first thing is that we want to understand what are the causes that affects the price movement, as well as the impact of these causes, how significant these factors is going to affect the price movement. Is this going to affect whether the price is going up or whether the price is going down? So this is the principle and forward thinking process of how a person uses fundamental analysis to first analyze the reason, the causes, to evaluate what is the possible effect as well as the impact. Now that you have already learned the forward thinking process of fundamental analysis from cause to effect, now let's turn this another way around, which is the reverse form of a forward thinking process, which is what we call the backward thinking process. So let's remove all of this cause and effect first, and then let's move backwards from effect to cause. So with the same example, we want to go through this process a little bit moving backwards. So now let's say you have already performed a behavior of eating already. Now you want to find out what needs to happen before you eat. So we move our process a little bit backwards. So if you have already eaten, you want to look at what needs to happen before you eat. So first thing you need to do is that you need to cook first, right? Now that you are performing the behavior of cooking, you want to find out what are the reasons behind that needs to happen before you are able to cook. So you find out that you need to prepare materials first before you are able to cook. And before you need to prepare your materials, first you have to open your refrigerator. And before you're able to decide to walk towards the refrigerator, first you need to feeling hungry or any other reasons for you to perform that specific behavior. So here we can see that our process is actually moving backwards. So earlier we have already gone through the relationship between the cause and effect. We need to have a cause, a reason first in order to know what is the impact, what is the effect of it. Whereas for the backward thinking approach is where we want to study what is causing us to perform this specific, the current behavior, and we want to study moving backwards, what are the effects of it. We want to find out what are the reasons behind that cause us to eat. So this is the process of how a person who uses technical analysis process would think. They're actually using a backward reasoning approach to find out what is the reason that causes the price to move. So this is where you have already gotten the answer. You already know the conclusion. You already know that the price is moving upwards. And what you want to find is that you want to find the facts to support the conclusion. What affects or what impact the price? Now let's apply this to our trading situation. So let's say you have already know that the market is going up, going down, or even going a sideways. So here you want to move backwards to find out what caused the price to move. What are the reasons behind? Is it because of the weather? Or is it because of the Malaysian ringgit? Or whether is it the local country policy that affects the price? So here we can see that for the users of technical analysis, their thinking process is actually moving backwards. They would want to find out what are the reasons behind. So by understanding all of the reasons behind that drives the market, they are able to determine the trend even better. So for technical analysis, you want to find out what is the reason behind that drives the price movement. You are actually finding evidence or data or even information to support your conclusion. Let's conclude a quick lesson that we have learned in this video. Although we may use different types of analysis to analyze the market, the thinking as well as the reasoning process behind is very different. We have fundamental analysis as well as technical analysis to analyze the market. So regardless of whether you use fundamental analysis or even technical analysis to analyze the market, ultimately what you want to do is actually to understand the market better so that you have a valid reason to hold your position, so that you have an evidence for you to make your trading as well as your investing decision, whether to enter the market or even to exit the market. So for fundamental analysis, it is using a forward reasoning approach to analyze the market. You're gathering all of the facts and data to find out what is the impact. Whereas for technical analysis, you are actually using a backward reasoning approach of thinking. You already know what is the price is going up or down, but what you want to do is to find out what is the reason behind that drives the price movement. So with that, fundamental analysis is a forward thinking, technical analysis is a backward thinking approach. So hopefully you have finally understand why an investor using fundamental analysis has a different thinking process as compared to another investor using technical analysis. If you find this video informative and useful to you, please share this video and give us a thumbs up. And don't forget to click on the subscribe button and the notification bell. Until next time, this is CY Saw, wishing you good luck and good trading.